Yeah, hello guys, welcome back to UCR Forest Academy. Once again, you are welcome back to the channel. In today's lesson, we are going to be learning how to spot a higher probability setup. We are going to be learning how to spot a higher probability setup. So if you know you are interested in learning how this kind of setup is gotten, this kind of setup now, this analysis, I did it with one of my VIP students. We anticipated that US 30 will arrive to this zone before dropping our favor. Before the market closed, this setup is running on almost 4%. It's almost running on 4%. This is no longer here. And again, you can see this one as well. We have on BTC USD. We did this one during our live class. We did this one during our live class in our VIP community. You can see price came to the bearish point of interest. It sold, gave us 4%. Price came to the bullish point of interest, bought, gave us 4%. If you go and check where BTC is now, you will know that this setup actually hits TP. We also have this one as well. We have this one. This is a GDP AUD. You can see when price came, mitigated the point of interest, sold in our favor, gave us 4%. We also have this one as well on Euro USD. When price came back to our bullish point of interest, it offered 3% before reversing against us. When I told them to take their stop loss to break even, I also dropped this setup in our free Telegram community, which you can use the link below to join so that you can confirm this thing. So when price gave us 3%, it started reversing against us. Although we had a second order, price didn't respect it and we lost the second order, but the first order the first order was hit by break even. And then we also have this one. You can see, okay, I've already explained this one. We have this Euro USD setup. After we lost that Euro USD setup, I came back to the chart and I spotted this one. Price still offered 4%. And then this one as well, this is a GDP AUD. The bullish POY failed, okay, after we had the 4% on the sell, on the bearish POY, but the bullish one couldn't hold the market, and then we lost that very particular trade. So if you are interested in learning how all these things are done, the only thing the only thing you want to do for me, or you are expected to do for me, is to make sure you watch this lesson to the end. That's all. Just watch this lesson to the end. After watching this lesson to the end, make sure you like and subscribe. In fact, like and subscribe to this channel. Make sure that your notification bell is on. Make sure it is on. In this channel, I drop useful lessons, quality lessons that are meant to help you in one or two ways of how to trade the forex market. Okay, so after that, also try to share the videos. If you want to join our VIP community, use the number you are seeing on the screen to contact us on WhatsApp to get the details you need if you want to be part of the particular academy. Okay, so I wouldn't want to waste much time, or I wouldn't want this video to be long. I just want to go straight to the point, show you guys how all these things are done. Especially we'll be starting with the US 30 setup. We'll be starting with the US 30 to understand what exactly we did on that very particular place that helped us to get that very particular setup that is running on 3%. Okay, so we will start with this backtesting tool here on XNext. So should in case if you don't know how to backtest, or if you don't have money to pay TradingView, only thing you have to do for me is use the link below, join XNext, and then do these things I'm about to explain to you. When you open this chart background, click on this replay button. Although I have a backtesting tool in my channel, just go and watch it. If you fail to understand this one, just go and watch that video I dropped below. Watch it. Believe me, you will definitely understand how to use this backtesting tool here on XNext. Okay, so now this is a US 30 on a 2-hour time frame. This is what US 30 on a 2-hour time frame. As you can see, the market has been bullish. Even if I go to daily time frame, it is very clear that US 30 is bullish. This market has been buying for a very long period of time. This market has been buying. So literally we have to be selling. We have to be looking for a way to buy. We have to be looking for, especially when we have seen that the market is in an uptrend market. But there is how this is how we do this analysis. Sometimes if you come to the chart, you discover that the higher time frame setup is bullish. Like you come to the chart, you discover that the market is bullish this way. Price made a new high, made a new low. On a daily time frame, you can see something that look like this, and then it's now somewhere around this level. Okay, so what you have to do now is to go down to 4-hour time frame to mark what we call a trend continuation POY. To mark what we call a trend continuation POY. If you go to my channel, there was a time I did a lesson concerning a counter trend and a trend continuation POY. You have to take that lesson serious. You have to take that, because that lesson is just like a foundation of even helping you more to understand whatever I have on today's lesson. So when you see this kind of thing now on a daily time frame, you are now scaling down on a 4-hour time frame to mark a trend continuation POY. What is a trend continuation POY? A trend continuation POY is, or order block, or whatever name you call it, is a particular zone that helps you to follow the higher time frame movement, as in it helps you to follow the trend of the market. Okay, so when you mark that trend continuation POY, I believe when you go down to 4-hour time frame, you see this thing that made a move like this on a daily time frame. You know, it is very simple like this on a daily time frame. You might see series of candles, like one candles going up, but on 4-hour time frame it might look like this. From here to this high, before the market broke this particular level, it may have done something that look like this. 1 or 2 high, you have this thing, you have a retracement like this, and then before the market now finally break this particular high. This is how you're going to see it on a 4-hour time frame. You're going to see it this way on a 4-hour time frame. So where should be your zone now? You now mark the extreme point of interest. You now mark what? The extreme point of interest, the unmitigated zone. I always say this thing, the unmitigated zone. As you can see, from here price had a BOS, right? We had this BOS on a 4-hour time frame. So even if somebody said you should mark your POY, I believe the POY was the last candle that led to that impulsive movement. You can see it has already been mitigated. So we are assuming that this was where the last candle is. It was here that the last candle is. This particular level was where the last candle is, and now this retracement has already mitigated that level. So everything about this level has failed. There's no as like it's totally useless now. There's no need for us to be looking at this particular zone again. We have to be looking at this level that the market pushed up and break another internal structure. We know this is a 4-hour time frame now. Inside this daily time frame, massive buy. Okay, so now we have to be looking at this level. We have to be looking at the next low. So when we look at that next low, we'll now mark our last candle, or maybe our range created candle, or whatever. So when we mark it, it's going to look like this. It's going to look like this. This is what we call a trend continuation POY. Now on a normal, when you do this on a 4-hour time frame, you will see that sometimes it will take a long period of time for price to come back to that zone. It will take a long period of time for price to come back to that zone. Sometimes like 1 to 2 days, all depend on the pair you are trading. There are some pair you will trade. It might warrant that you have to wait for that set of like 1 to 2 days. Some of them 3 days. Are you getting me now? Some you can actually wait for 24 hours. The market will return back to that zone. That's one thing you need to know about volatility. Okay, so what can you be able to wait for price to return back to that zone? Now this is now when counter trend will now enter. When you have already marked this particular POY here on a 4-hour time frame, you need to wait for price to return back to that zone. But while you are waiting, let's say price made a move like this on the 4-hour time frame. Price made a new low. The next time price made a new high, and the previous high that price made was unable to break the main high that price has already gave. Let's say price gave a new low and now printed a new high that was unable to take out the previous high, and the next thing price now sold and broke a structure. In fact, even if you scale down to 1-hour time frame or maybe 2-hour time frame, it will get more clearer. You'll be able to see all these things very, very clear, because maybe on a 4-hour time frame you might see some series of full body candles. It may not be very clean, but when you go down to something we call what they call it a 2-hour or 1 hour, it might really expand. This thing will expand and you see what exactly that is happening there. Now when you see something that look like this now, then the next thing now price did a retracement like this, started dropping. Now do you know that there is already a point of interest here? There's already what a point of interest around this zone. There's already an order block. So what kind of order block that is here? This is what we call a counter trend POY. We call it what? A counter trend POY. Do you know why I call it a counter trend POY? On a daily time frame, the market is bullish, but we are now trying to take a retracement down to that bullish point of interest, so that from the bullish point of interest we can then buy. Okay, but we are actually expecting this market to come back like this, pick up our order so that we can sell down to this POY. Okay, we are expecting the market to return back to this POY, pick up our order so we can sell down to this POY, so we will be able to join the sell. Okay, so now, but what if the market did not return back to this POY and keep dropping down to this level? There is no problem. When the market get to this level, you will start buying. You will notice something about me and my risk to reward ratio, which is 1:4. Even if I go in on a buy here, my TP will be somewhere around here. From this level up to this high will be 1:4. From this level up to this high will be 1:4. From here down to this level will be 1:4. Are you getting me now? So that means even if I go in on a buy here, my TP, my 1:4 will be somewhere around there. It's not like I'm setting it there. It's where my 1:4 always rhyme. So when when I take a buy from here, immediately my TP gets hit. This zone may reverse the market. I might decide to still take the sell, maybe something that look like this. Let me remove this thing, because I love taking my time to explain. Now let's say price tap into this zone. Now it failed to mitigate this level. It failed to mitigate this level. Can see we already have some good bearish point of interest. This one has been mitigated. It's just like opposite of what happened there is what is happening over here. Okay, so now let's say now price now tap into this zone. The next thing, it triggered my buy limit order. It started buying. Then when price is returning back to this zone, I might decide to still leave my sell limit order there, because I know that immediately that price is triggering the sell limit order, my bullish order has already been hit. Like the buy I took from here, the TP has already been hit. Now I know that something that look like this may happen when price return back to this POY. This POY can wage price a little to reverse it, something like look like this, before pushing up again. So even from here down to this level is another lot number of pips. Okay, is another lot number of pips. And even if you check again, this place we marked as an inducement area will serve as a change of character. So the moment price breaks above that high, mitigate this zone, it drops in our favor. We have already capitalized the sell. We already capitalized what? The buy. Then from here again, we take up another massive buy, because the moment price breaks this high, breaks this internal high, we should not forget there's another point of point of interest around this zone. So even if we are taking a sell down to this POY, we will never have our TP beyond this level. You even check it that from here down to this level will always be 1:4. It will always be what? 1:4. Then from here again, we take another buy. Now this time around, will you be marking any bearish point of interest like this? Will you be marking any bearish point of interest if price is now respecting this place? No, because this level failed to break any level. It failed to break any low. As you can see, this particular zone you are trying to mark, it failed to break any low here. So there's no need for you now to start marking this level again, because if you mark this level, there's a higher tendency you are standing on their way. Okay, and with what you can see here, we have seen that buyers are gaining control over sellers. Buyers are what? Are gaining control over sellers. I taught my students order flow. That order flow lesson is enough to let you know the overall like the people that are gaining more strength than the opposite. Now you can say buyers are gaining what? Buyers are gaining more strength than the sellers. So from here now, we will target the new external high. Okay, so this is you taking a counter trend and also taking a trend continuation POY. Some of you will still ask me a question: what if price did something that looked like this before price reached this bearish point of interest? It sold a little like this and started reversing like this. Even that time will be when you will like this setup very, very well. One thing about counter trend there is that always hope for a counter trend to pick up, as in to pick up your order before it gets to any discount level. If you are taking a counter trend and you have a setup that look like this, always hope for that setup to get triggered. Let it be that the market took the count as in triggered the counter trend first before moving down to that very particular trend continuation POY, because there's a higher tendency that if the markets pick up the trend continuation POY first, if it's coming back to that counter trend, it may weak you out before still moving in your direction. That's one thing you need to know about counter trend. And counter trend again is very good when the market is very closer to each other. Let's say on a 4-hour time frame now, the trend of the market is like this on a 4-hour time frame. Price give you a new high, price give you a new low. Let's say the trend of the market is like this on a 4-hour time frame. Price give you a new high, price give you a new low like this. The next thing now, market is coming back. So let me try to draw something. Okay, let's keep it this way. Let's keep it this way. Okay, price gave you a new high, price gave you a new low, price returned back, mitigated this high. The next thing, price sold massively, right? Then when this thing is, then you know that we're going to be marking this zone. That's number one thing. We are going to be marking this particular level because we want to continue with the direction of the trend. We are going to be marking what? This level. Now let's say that when price is coming back like this, price give you a new higher high, or maybe on a 1-hour time frame, give you a new higher low, right? This higher low could not take out this very particular low. That is when the bullish sentiment is entering. There was a time I taught you guys here on YouTube about failed swing highs and failed swing low. You don't know how powerful that lesson is. It happens very early before change of character. It tells you that the market is about to reverse before change of character. Now the next thing, price now pushed up and break a new high. Now you see, from this level up to this high, the market has not gotten to any discount level, because even if you plot your fib from this high down to this low, you might see that somewhere around where price is now is a premium level. Let me show you now. Is a premium level. Let's try to bring our Fibonacci from this high down to this low. You will see that where price is currently on our premium level, so it shouldn't even be gaining our attention to start selling. So here will always remain our bearish POY. Here will always remain what? Our bearish POY. So your own now, your own is to hope that this market comes back to pick up your bullish point of interest before it return back to what? Before it return back to this discount level. Do you understand where I'm heading to? Before it mitigates or return back to this discount level. Because if this market tap into this discount level first, if this thing is coming back like this, if this thing is coming back, there's a higher tendency this thing might take you out before still moving in your direction. That's one thing, because you know that the overall trend is massively bearish. So sellers are gaining more control. It's just like you now standing on the way of soldiers. Like you guys are 10 and you are standing on the way of almost 100 soldiers. You know, when they approach you guys, there's a higher tendency they are going to finish everybody. They're going to finish what? Everybody. So that is what happens to you when you are taking a counter trend. Okay, but sometimes if price did not really return back to that discount level and it came back to do something that looked like this, let's remove this thing. It came back to do something that looked like this. It came back, mitigated your order. That is now when it is looking more good. As in, if this thing return back to the discount level, there is no problem. You've already made some profit. Okay, but if this thing moves straight to the discount level first, that is when the higher probability of you winning that setup gets, as in, it start reducing. Okay, so now let's go to the chart. We have spent some time understanding how all these things are done. So let's try to understand what exactly we did on US 30 that helped us to make that. All right, so this is the chart. So let's go to the chart to try to understand what exactly we did on the chart to help us to understand or to make that very particular profit we got on US 30. Okay, so this is US 30 on a 4-hour time frame. We have already seen on a daily time frame that this market is bullish. We're supposed to be looking for a way to buy. So where are we supposed to be looking for a way to buy? If you check, this market made a new higher high, a new higher low, a new higher high, a new higher low, and then from here the market bought. There was an incomplete retracement. This retracement could not come back to mitigate this point of interest. Are you getting me, guys? This retracement here could not come back to mitigate this point of interest. The next thing, price keep buying. And from here we can see we had a little retracement. The next thing again, we had another retracement. So this is now where the current price of the market is. Even if I use 2-hour time frame, let me use 2-hour time frame so it will get clear. So this is where the current price of the market is. This is where the current price of the market. Let's just use 1-hour time frame to mark this zone before we. Okay, first of all, I have to hide this chart. Yeah, I have to hide this chart to explain this thing very well. Okay, so let's hide the chart. Let's try to clean everything. And you know how I do it here on XNext. There's no need for us to switch to time frame to time frame. So we're going to be using one particular time frame, because each time you switch to time frame, they will misunderstand you and you will have everything you are doing like return back to normal. Okay, so now let's start from here. Let's try to hide the chart from here. Let's try to hide the chart from this particular level, and then we'll try to play price forward to understand what exactly went on around that zone. So we can see US 30 is bullish. Normally we're supposed to be looking at this particular zone here. We're supposed to be looking at this zone to buy. So let's see whether price return back to this zone. Let's play price forward and to see whether price return back to that zone. So you can see for the meantime, this zone was still our zone, but the next thing, US 30 went up massively and broke this particular high. It broke this high. As you can see, we had a BOS around this zone. So now we are already waiting for the market to return back to our POY for us to take a buy. So let's keep playing price forward. Let's keep playing price forward. So you can see where price is now. So when price is here, we don't have any business somewhere around this level. We don't have any business somewhere. I think I overhide this market. Okay, it's coming. Please have some patience so that we can actually see how that setup was gotten. So at this moment, what do you do on the chart? What do? You just step out. You just leave everything. Leave it. There's no need for you to be looking for a way to press anything. Now this very particular moment is when we have seen a reversal. We have seen what? A reversal, which is somewhere around there. We have seen this reversal, and this is a change of character here on a 1-hour time frame. So where should be your zone? This should be your zone. This should be your zone. This is the last candle that led to that led to those sells. This is it. This is the last candle, I think. Like this, let's keep it this way. So this was the last candle that the market mitigated before it dropped in our favor. If you go to a 2-hour time frame, you will see that this last candle cleared liquidity above this high. It's cleared what? Liquidity above this high. So what are we now expected to do is to wait for inducement. Wait for what? Inducement level. Now we are now taking a counter trend. We are now taking what? A counter trend, and we are now waiting for the market to return back to this what? POY. We are now taking what? A counter trend, and we are waiting for the market to return back to somewhere around this POY so we can buy. But we know that this POY is very far from where price is. So our expectation now is for this market to return back, pick up our sell limits order before returning back to this one, before returning back to this POY. Okay, so let's keep playing price forward. Let's keep playing price forward to understand exactly what price did. So we play price forward. So as you can see, when price is doing all these things, I don't have any business with it. I don't have all these things are inducement level. All these things are what? Are inducement level. These are early sellers stepping in to buy. These are what? Early sellers stepping into to sell the market immediately. So their stop losses are resting in the front of this POY. Their stop losses are not resting above this POY, just in the front of it. So let's play price forward and see what's happened to see whether price really came back to that POY. So as you can see, now price has already wicked all of them out. I'm still not interested. I'm still waiting for this zone, so you can see what happened. So we see whether price came back to tap into that zone after some time. So this was when price came back to tap into that zone. As you can see, this was when price came back and tapped into that zone. Look at when price came back, tap into that zone. You can see price has already cleared all this liquidity. Even the kind of liquidity that price cleared there is a trend line inducement level. You can see this is what we call what? A trend line inducement level. I have a lesson here on SMC that best explains all these inducement levels very well. So you can see our higher probability setup has been triggered. Our higher probability setup has the following confluence. It has a clear of liquidity, it has a fair value gap, and it also has an inducement level. Above all, it also breaks a structure, which is mandatory. Your higher probability setup must have a clear of liquidity, a BOS, a fair value gap, and also what? A inducement level. You can see how price tap into it, and price is now dropping in our favor. So you will see where the market is at the moment. So you can see From here down to this level is almost 4%. I'm telling you the truth, it's almost 4%. So this is where we are currently in now, or before the markets close. So you can see how we are able to get this set up. Just similar explanation I gave somewhere around this level. I said we hope for the market to pick up our sell limits order before returning back to our bullish point of interest. Okay, so now let's go down to, let's check BTC USD. Let's take BTC US to see how we are able to do the same thing with the same pattern, the same strategy. Okay, please make sure you like and subscribe. Make sure you like and subscribe. Make sure you like and subscribe and share this lesson. Help a struggling trader out there so that he or she will know what she's doing in this market. This market can really renew your life, destroy you, but I believe with the right knowledge in place, you'll be able to understand whatever you are doing here. Okay, let's try to find out that very particular place we had that very particular buy on BTC USD. Okay, so what was that actually? What was that? Please exercise some patience for me. Okay, let's go to 4-hour time frame so I can actually hide that part. We got that set up. Okay, it's somewhere around this level. So we're going to be trying to hide the chart. We're going to be using 2-hour time frame. Better still, let's use a 1-hour time frame. Let's use, you know, this is BTC. It's very volatile, so you don't have to be seen on higher time frame. So when you go to 4-hour time frame, what is the trend of BTC? You and I knows that this market has been buying for a long period of time. Take a look at this now, or let's check it out here on the chart, because you know that one we are seeing on this on that XNEX is normally tiny. Okay, let's check it out here on the chart here. So we can see here on a 4-hour time frame. Let's use 1 or 2 hour. So before the market made all this massive buy, this was that place we are in. This was that level we are on before that market went impulsively. So we discovered that BTC was on a massive uptrend market. It was bullish. This market had been buying for a long period of time. So this was where we were currently in. It was this level. Okay, so it was this particular level I was trying to show you guys on XNES. Okay, it was this level. So let's go back to the chart and hide that very particular part. Let's go back to the chart, hide that part. Let's try to hide that very particular part and play price forward to see what exactly price did that very particular time. So I will start from here. We just start from here. We start from somewhere around here. Okay, nice one. So please make sure you follow this lesson to the end. Make sure you watch the lesson to the end, because I believe that you will definitely understand. And you just have to know that you don't need to watch this lesson once and you'll be able to understand whatever I'm saying. You just have to try and watch it like 1 or 2 times so that you will definitely understand exactly what I'm trying to explain on this chart. So with what we can see from here, BTC USD has been bullish. This market has been buying. As you can see from here, we had a BOS. We have this major BOS here. We have this major BOS. You can see we have this major BOS. So after this major BOS, price gave some retracement, and then we had another massive push to the upside, breaking another structure. You can see we have another break of structure, right? So we are now going to be marking our trend continuation POY and also our counter trend POY if there's any need to follow the counter trend. Normally we're supposed to be looking at somewhere around this level. Normally we need to wait for the market to return back to this POY so that we can buy. But if you check, if you are doing something that look like this, you see from here down to this POY is very far from where price is. You will do this analysis, you will go and sleep, you will wake up, the market has not even arrived to your zone. You will even go on a vacation before the market will return back. It is going to take some time. So you need to learn how to trade very closer to where price is, and counter trend will help you on that. That's why I still encourage you guys. It will not cost you much to be part of the VIP class, because I'm going to take my time to mentor you on how all these things are done. So you can see when the market made this impulsive move, he had a retracement. The next thing, price pushed up and started consolidating around this level. I'll show you guys how I did that setup. So from here now, let's play price forward to see what's happened. We can see we have a point of interest here, but there was something I told my students about POYs. Each time you want to mark a point of interest like this, let's say price made a new high, break of structure, came back, mitigated this zone. The next time price now bought massively like this, You see this thing, this is a massive buy. This is a huge displacement. You can see that it's now very far away from where this your POY is. It's now very, very far away from where it is. And then let's say the price made a little retracement like this and kept on buying again. It kept on buying. Now the truth of the matter now is that you have to start looking at this POY. You have to start looking at this one that is very, very closer to price. But before you will take a trade from this one, you need to wait for price to come back like this. Mitigate it. As the late price come and mitigate that order, allow it to go. Just leave it, or better still, you can look for confirmation there. But it is best when price mitigate it and breaks another level. Now it has now given you a bullish sentiment. It has now printed a new order flow for you. It has now printed a new unmitigated zone for you. Okay, so now you now proceed and mark that very particular what zone that price has given, that fresh opportunity that price has given to you. So I would love to hide this thing because this was not really part of the lesson. Well, if I try to explain that one, it's going to take lots number of time for me on this lesson. I don't want to prolong the lesson, so let's try to delete all these things. And then let's proceed to see how we are able to get that BTC. I would have even used 30 minutes setup, but let's just go down. Let's see how all these things are done. So you can see what happened from here. It still broke another high. It still broke the particular high like this. There was a break of structure here, and then we are not still interested. We are not still interested. Now let's look at what is really going on. It was consolidating. There's no movement. And then look at what just happened. Just look at what happened. Price made a break of structure. Price retraced, mitigated this order. Some buyers step in and bought. They made profit. Price now came back, retraced, mitigated this order, now made a new high. The new high that price gave could not take out the previous high. It could not take out the previous high. There was a time I taught you guys failed swing high. This is exactly what I mean, failed swing high. You can see, this is what I mean by failed swing high. So you can see when price came back, it could not take out the previous high. That is now when, even if you are taking this buy, the best thing you have to do is to take your stop loss to break even. Because the moment price does something that look like this, it's not going to look funny. It's not going to look funny. If price is coming back to that your entry point, there is no emotion. You don't have to pray over it. So now let's play price forward. You can see price made a new high, price made a new low. Some buyers step in. This blue candle you are seeing are buyers trying to buy. They are trying to buy, but there are enough sellers in the market. That's why you can see that the candle is now declining. Now you can see the next thing we had this massive sell candle. The next thing again, the market is now dropping. The on a lower time frame, it's just like we had the BOS here. On a low, although I cannot switch to that lower time frame, but we had something like a BOS here. And this green candle, you can see this green candle here. This green candle was like a little retracement to mitigate that lower time frame candle, which is this. So we have to mark this candle. Even on 1 hour time frame, it has not still been mitigated. I marked this candle on that lower time frame, and this green candle, this particular one, was my inducement level because price could not mitigate it. And even if you go down to lower time frame, you will still see that this thing has a fair value gap. Let's proceed. So as you can see, that was from there that price started selling, and it did not come back to pick up this order. That was that time I told you guys, each time you are taking a counter trend, always pray that this thing comes out to take you off, as in to mitigate you, so that both of you can start going down, so that it will not just leave you behind. Okay, let's play price forward again and see what happened. So this was when price came so closer, then it still dropped. Now price has now tapped into that zone. Price has now tapped into that zone, and now you can see now what is now going to happen. And then for now, just scale down to lower time frame, look for change of character, buy up to this level. Okay, buy up to that very particular level. From here to here is more than 1:4. Okay, depending on whatever you are targeting. So as you can see, BTC kept moving, but pay attention again to what really went on here again. Pay attention. In as much as we have missed out on that sell POY, look at what went on here. Let's refine this thing further down to this week. Let's refine it further down to this week because this is BTC. Look at, from here, market made an aggressive move to the upside and change character. It changed character like this. As you can see, This is a change of character. So where is your new zone? Where is your new zone? This supposed to be your new zone. This candle is supposed to be your new zone. What is this candle about? This is a trend continuation POY. This is a particular POY. You are waiting for price to tap in, so you will start buying in the direction of BTC because the market is bullish, right? And then you still have your eye on the particular POY. Just that the probability of this one playing out has now reduced because price has now mitigated an extreme level. Okay, but there's no problem. We keep playing price forward to understand what's happened. So you can see price came so closer to mitigate, price pushed up. That is exactly what we want to see. Remember, I told you guys our higher probability setup must have a break of structure. Number one, after break of structure, it must give you inducement level. After inducement level, it must give you a fair value gap, which this one equally have. After the fair value gap, I believe there's no much thing again. You now draw your zone. Okay, we now proceed. Even it must also give you a clear of liquidity. Okay, this one gave a clear of liquidity. The previous week wicked out the previous low. So let's proceed. So as you can see, when price was doing all this and I don't have any business, there's none of this is my business. I just left it like that. I just left it, and then you can see, let's play price forward to see what really went on. So price could not really pick up our order, and now price is now buying. Price is now approaching that level. Price did not pick up your order. There's a consolidation around this zone, and this is just like an equal high inducement level. Look at it. This is what I mean by equal high inducement level. Equal low inducement. Whenever I see this kind of thing, I get like my attention is get drawn to that very particular setup. So now let's play price forward to see what really went on. So you can see now price has now tapped into that counter trend POY. So we're already on sales now. We're already on a sell, and we hope this thing plays out in our favor. So as you can see, now price is pushing. You can see now price is dropping in our favor. So from here down to this level was when I started selling. You can see I started selling down to that POY because I have been waiting for this POY. This is like my counter trend POY. So I had to take it. Okay, this is like my trend continuation POY. And if price respects this level, you will never see me drawing any zone again. Okay, so now let's play price forward. So the 4% has been hit, and now price is closer to our bullish point of entry, which has now been activated. You can see it has now activated that level. So now, would you be marking any zone here again? Number one reasons why you will never be marking this zone is, number one, we have an equal high POY here. Because this is what I mean by what equal high. And whenever I see this equal high, it is a liquidity area for me. I will never even mark any POY there, because each time I do that kind of thing, I get stopped out before the market moves in my direction. So that even give me more confidence not to even look at that level. So it is now, since price is now respecting this level, it is going to chase this high. It is going to chase what? This high. Although my take profit level is not above this high. It's just in front. I think the time I bought from this level, my take profit level, my 4% was actually like this. It was somewhere in front of this POY like this was where my 4% was. I think it was in front of that very particular POY. Okay, it was there. So now let's play price for to see whether price was able to hit that 4%. So as you can see, what's happened, price was able to hit that 4%. So you can see price came so closer, and then you will see what BTC did. So as you can see what BTC did, as you can see, price now is consolidating. The next thing we had, this massive, going to see what really happened. And price now hit our TP. So you can see price has already hit our TP. So this was how I was able to get that very particular setup, because the counter trend setup played out and the bullish point of interest played out. It's not that difficult. The only thing you have to just do is to repeat whatever I've already told you guys on today's lesson. We are already on 40 minutes. We have done a lot. I would even want to end the lesson here. If not, after that, want to do the analysis of Euro USD and the rest of them. But here is a simple thing you just have to take out from this lesson. Whenever you are on any chart or in any pair, the first thing is to understand the direction of that trend. Understand the direction of that trend. If the market is bullish like this, on a daily time frame, scale down to 4-hour time frame to mark your trend continuation POY. So let's say your trend continuation POY is somewhere around this level. Now, in as much as price is coming back, you can actually scale down to 1 hour time frame. The moment you see something that looks like this, a new high, a new low, a new high,
sorry, a new low, you have to mark, give a particular point of interest, and take a sell from here down to this POI. The moment price mitigated this level, now start buying, bro. Okay, so now this is where we're going to end the lesson. Please, I still encourage you to like and subscribe. Make sure you like and subscribe. Okay, if you did benefit something, or if you have any question, do well to drop into the comment section. Do well to drop it in the comment section. I will always be there to keep on assisting you to make sure you did understand every single thing I explained on today's lesson. For now, I'm going to end the lesson. Thank you, and may God bless you.